Hello, guys. I hope everyone is doing well here. A very happy new year to you all in advance. And I hope everyone's 2023 has went very well. The markets, for example, Nifty has been up over 20% this year. S&P 500 has been up over 24% this year. So these are the returns by the major index this year. So for investors, it was a really good year. They were able to average some good returns this year and compound their wealth. I hope also like today's video is I'm making this video to give you all the market view for 2024 and also give you some more thoughts on what I think about this market and where it is going to go in the short term, medium term, and in the long term. So let's talk about it. One of the geopolitical case studies that I want you all to track is the Red Sea War. So just to give you a short on the Red Sea War, I also want you guys to go and research about it. So what is happening in the Red Sea is one of the rebel groups like Hamas, a terrorist organization. So the group is called Houthi group, if I'm spelling it right. So what they are trying to do is they're trying to block the trade route, which is really important for the trade all over the globe. Uh, so it is a canal between Middle East and I think Middle East and the African region, which shortens the route between Asian exporting countries, which export the goods to Europe and South America. So currently, they are trying to block their route, and this is causing a lot of problems for exporters in countries like India and China. Please go and research and uh, think about this. Not think, just go and research about what I'm trying to talk here. So this is what is happening, and currently the global trade to go on is really important for India's growth story in the next 10 years. So this is going to affect India. I don't think, I don't know, not I don't think, I don't know if it will alter down into stock markets. It might. If the things get bad here, it might alter down. So please go and do your own due diligence. Now, what I'm trying to do here is I'm just trying to give you all some view for the market for the next 1 year, short term, medium term, and long term. I told you about. So this was a chart of Nifty. It has been a brilliant year for us. We have made some new all time highs. We are almost approaching 22,000 levels, which was our target from I don't know when. You can go on and watch my first or second YouTube video. I talked about this target then also. Hence, we were long on equities. The Nifty's in Nifty, the PSU as a sector has done really well. So this was the public sector enterprises PSCs. So this was the most outperforming index for the given year. Let's take January. This is, I think, it has given almost a return of 86% in this year's, which means that the PSC stocks are already up. I just want to highlight here is, guys, booking some profits in our portfolio is also not a bad idea. So if you were long on PSEs, I believe that you should book your profits right now because I think market is already a bit extended. I'm not saying that the Indian markets cannot go further up. In the next 10 years, it will go up. It will go up. There is no doubt in it. As our economy grows, our market will go up. But what might happen is the sectors might rotate. So currently in this year, you have seen that Nifty PSEs has outperformed. I have a pick of Nifty IT. So now I would want to be long on this sector because Nifty IT has been underperforming since last 1 year, and I think now the sectors might rotate and Nifty IT might start outperforming. Also, one of the observations was chemical sector would start to outperform. So now the profits that you have already earned in being long in Nifty PSEs, now you can book it and you can switch your portfolio. You can book some of the partial profits and put in some undervalued stocks that are currently trading in the market in Nifty IT, and you can make some good money there. So that's what the idea is. One of the stock picks that I want you all to watch out is Coforge. So I'm saying that Nifty IT might start to outperform, and this is the outperforming stock of in Nifty IT, which has just crossed its all-time high of uh, 5850 last month, this month, in the month of December, and I have a target for this of 8500 approximately. So you all, so the idea I just want to share is you can do your own research. It is not an advisory service that I'm trying to give. You can go and have a look at the financials. and things like that. So for example, me myself, I have my financial shares as well. So the Coforge revenue has been growing, the RSI is strong, the EBITDA margin is doing quite well, the PE ratio is increasing. So this is just for a, what do you say, a double, what do you say, a double confluence on my technical analysis. So I've also done technical analysis plus fundamental analysis. So these technical indicators are just showing you a trend here. It might be helpful, but I also do go and read their financial reports, which I advise you all to also do so. Go and read their financial reports. Don't just have a look at these indicators. And also, yeah, that's all about Coforge. Coforge is one of the good picks for me for the next year. Um, so yeah, that's all I want you guys to do. Is also I want you to be what do you say, still we are just to give you a view for now, we are still bullish to sideways on the index. We are still not bearish. We will only become below 20,000 until and unless Nifty is above 20,000. I won't be looking for any short. Let's see, this is the channel I was going to talk about. Until and unless we break below this, we won't be taking any bearish bets. If we are above this channel in a monthly chart, just so easy, this low of December is our stop losses for what do you say, our long positions, or what do you say, it is just the cutoff level. Just to clear it, it is a cutoff level. So until and unless we are trading below above this level of low of December, we might continue to stay bullish, and there will not be any aggressive what do you say, aggressive selling in the market. That's what I mean. So the view remains buy on dip, a broader view. Again, I'll just show you the charts of S&P 500 also, so we get a broader view of what is happening in the US market. US market, I think, has approached its all-time high. This was the closing, highest closing in a monthly chart of S&P 500 in the month of 1st December. This was the post-COVID rally high. We have approached this, so we might find some resistances here, or if we might get some resistances, because market do not forget these kind of levels where there was a bottom or there was a high formed. So we might see some selling here, but if we are able to break and close below this on a monthly basis, or also on a weekly basis, we close at all-time highs and things like that, then it is a really bullish sign for our markets, and we have no reasons to be short. So a trailing stop losses for the US market is again December's low, uh, or you can refer to this breakout of 4,500, just a round figure of 4,500. December's low is a better, what do you say, better stop loss. Just from my experience, I'm telling. Yeah, but you can count, if this trend line, the we broke above the highs of July 2023, if we come below it, it is a cutoff level for being long on the markets, and then we can see aggressive selling in the market. uh yeah, that's what I mean by cutoff levels. Because if we come till here, it will solely be a retracement, and you might continue to see buying. So that's why I'm telling, there might there might not be any aggressive selling in the market until we are below these cutoff levels. And if there is no aggressive selling in the market, we might not make money, any money, good money, shorting the index. Plus we are also risking, or we are bugging the trend, we are going against the trend. So trend is your friend. That's what we learn as technical analysts. So if we are trading above the cutoff levels, I won't be shorting any index. You can go and have a look at the weaker stocks. I have no advice there. You can check if the stock specific action is showing you that they have missed some earnings, or they are technically very bearish. You can go short there, because that is pretty easy to do. Like shorting the stocks, or going long on any particular stocks, is mostly easier, but it is not safer. Because what happens is, if you are carrying some big positions overnight, or a swing position, so an index of a country might not fall 4 5 10% in a day, because it is a broader index. For it to fall 4 5%, all the 500 stocks of S&P 500, for example, have to fall 5 10%. But that doesn't happen until and unless there is some news like COVID-19. That also 10%, I don't think at that time also market fell in a day. So that's what I mean. Um, yeah, so I think I was able to tell you guys what I think of. I told you guys that this is the target. We have reached this target, so it is better no to book some profits and take home, or some what do you say, a contradictory investment idea can here be gold. The charts of gold look very good. gold has broken above its all-time high, and it's trading. So if you want to book some profits and invest into gold, it is not a bad idea, because we have already earned a lot of money in equities, and putting some money in gold is not a bad idea. This is the gold price in US dollars. You can also go and have a look at Indian chart. But I refer to this because it is heavily, this is the chart which is mostly traded in, so gold is mostly traded in US dollar. So I'm talking in terms of world economy. Yeah, so gold is at all-time highs. You can book some profits in equities, put it into gold for the next years. You have already earned 24% return in this year. Or if you were long on stocks like DLF, which I told you, I'm netting almost 40% return in a year in DLF. So I would be happy to book some profits on DLF and go long on gold. Still, my targets on DLF are not hit, but it is just an idea that I'm trying to give you here. Is so what is important for us as investors and traders is to compound our wealth over and over a period of time. So in 1 year, we have received some such good returns. For example, 20%. If you were long on any good stock, it might have yielded you around 20% return. Uh, like any Nifty PSEs or something like that. Just book it, put it in gold. Now you can get a target of 15% maybe in 1 year, because our target is 15% upside from here. So that's how you are able to average at a, what do you say? So if you have yielded almost 25% return this year and you get 15% this year, which is what, 25 plus 15 is 40. And so you are averaging, divided by 2, you are averaging 20% returns for the 2 years, which is, I think it is world class. Warren Buffett in his lifetime has achieved a CAGR of 21%. So if you are able to do this over a period of 30, 40 years, 20% every year, you might be the next Warren Buffett in India. So, or in the US, if one of you is watching this video from the US. So that's what I'm trying to suggest is, now you can try to play some defense. And also, just talking from a historical perspective, January has not been a bullish year. If you can go and check the monthly charts of what has happened in Jan, so Jan hasn't been a bullish year. So don't now that all the new year and Christmas has ended, I think there will be some profit bookings in the market might go sideways if there is not a sell off from here. It might correct a bit if it wants to go further up, because we can't go straight up. We need to have that dips in between, uh, before going up once again. So that's all the idea I wanted to share about 2024 is sector rotations. Go and have a look at the sectors which have underperformed, uh, underperformed, like Nifty, IT, chemical sector of India, like Tata Chemicals. Monthly chart looks awesome to me. It has just broken above its this triangle, and this might now start to trend on the upside. And I have a target of 1500 in Tata Chemical, which is again, what do you say, 40% from here. So yeah, you can bet some of your money again. I've seen good revenue increases, EBITDA margin is good, plus the P ratio is increasing, which means this can be a good pick. Again, one of the picks for you guys is Gale Industries. Again, a good PSE stock, which is trading at its all-time high. I have a target for this stock to go up to 200 rupees for the current year, which is almost 30-40% for the year. And yeah, 20%, 200, and so on. This is the monthly chart of, what do you say, Gale Industry. Again, trading at its all-time high. We can treat a stop loss of this low 132 as our stop loss for this stock. The risk to reward is not ideal here, but I would want you guys to do your own research. This is one of my picks. I'm already currently having some positions in this stock. I'm not advising anything like that. So yeah, you can treat this trend line, breaking below this trend line as a stop loss. So a stop loss can be somewhere about 140. Yeah, so that's my picks for the year. I just want you to again see one of the charts of which is really important, that is dollar index. So dollar index has been selling off, and that's the reason we have been going up. Now we have come at a very crucial support in dollar index. This has acted as a very crucial support. So if we see some kind of a upward move from here, our equity markets might come under pressure, and we might not see the same rally that we have been seeing in December. So that's the reason, one of the other reason I'm telling you guys to come on back foot from your long positions. Don't have any very aggressive longs here, because wait for some dips. So Tata Motors is one of the most outperforming, or the most outperforming stocks in Nifty this year. It has doubled in this year. I hope you guys have heard it somewhere or there. All the news have been started to publish it. So it had make a high of 800. So just to give you a perspective here, the perspective here is the people, for example, who have earned 100% return in 1 year, why will they be not booking profits at this level? If you guys can ask this question to yourself, they will be booking their profits at this levels, because it is really important to book profits as they have averaged. So for example, if some of the person has a under 100% this year in returns, they are done for the next 5 years. They don't even have to work, because 100% is a world class return. So they will be booking some profits here. So I'm just trying to say that this market is overextended here. You cannot go and buy Tata Motors now. I know it is all over the news, Tata Motors double, 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 but this is the time when market makes a top. I'm not saying that Tata Motors will not go up from here, but the risk reward is not favorable. That's all I mean. I know what this chart is going to do, but don't listen to the news and go and buy the stock now. People have already earned what they wanted to, and now there is no reason that they might still want this stock to go up. They might take it down, book some profits here, wait, and like 3 4 months, let the stock go sideways, and then if it breaks out, they might again be then it is an indication that the people are still long. But going long at such levels, listening to the news is not worth it. So that's all I wanted to say. One of my favorite picks is Infosys also. Infosys has also just broken or made a lower low here in April 23, but there was no follow up to this low. This was the month where Infosys earning was beaten. Like it had missed its earnings estimates, and that's why the stock fell. But there was no continuation to the sell off, and now it has confirmed. What do you say? So this was a downtrending structure. So lower high, lower low. Now it made a, what do you say, lower high, no, like lower high as compared to this high, then a higher low as compared to this low, and it has broken below. So the Dow theory has changed in Infosys, and it is one of the best stocks in Nifty. So you can easily bet on this. It is a no-brainer buy. 24% upside to its all-time high can be a good targets of 1900. It can also go further up. You never know, but still, a target of all-time high is no-brainer from here. This is the target. December low can be a stop loss again. So now all the equities that you have been long in, you can take December low as the stop loss for all the equities. December month has been very trending. So a bland idea here that I have given myself a trailing stop loss on my equity positions as December lows. And also, I'm not waiting for my stocks to hit my trailing stop loss. Rather, what I do is for example, if I had taken a 100 rupees risk on a stock, if I'm earning 300 500 rupees, that is a 5x return. I'm trying to book some profits there. I will keep some positions to trail it, but you can also take sometimes you can take profit based exits, and you can book your profits, no, because we are here to earn money. Why to marry a stock and stay with it for life? Yeah. So that's all I mean. That's all I had to say. Just last chart that we would like to analyze is Brent crude. uh, US oil. We'll check the charts of US oil. So crude oil has been also downtrending. So crude oil, dollar index, this all they have supported us throughout the fourth quarter of 2023, and market has shot up furiously. For example, crude has been falling from last 3 months, and you know that the crude oil is used in manufacturing purposes, and businesses use it, and the prices of crude going down generally means that businesses are will do well because they are saving on the cost. So crude has been downtrending. Now it has approached this low. This low is very crucial for crude, May of 2023, and if we go below this, it might be a downtrend, but I think this is a very crucial support for crude oil. And if we see some kind of a pullback from here or a bounce from here, equity markets or emerging markets like India plus equity markets like US, the big mother markets, all the companies might come under pressure, and yeah, the markets might not give us the rally they have given in the last few months. So that's all about my view for 2023. I hope you all I hope you all do very well in 2024. Um, I wish you a very happy new year in advance, and I wish you success, wealth, um, success in terms of what do you say, also health and money, just not money, because health should be given a priority. Try and picking up some new hobbies this year. Go to the gym, go do something that also makes you happy, just not to make money. Trading can be something that makes you happy, so it makes me happy, so I will continue to trade. I'm also trying to learn some coding so I can become a discretionary trader. Currently, if you are trading on your experience or without any mathematical models, you are a non-discretionary trader. So I would also want to shift someday to a discretionary trader, and that's the reason I'm learning coding and statistics. A very interesting topic. I would love to make some videos on it for you all, but I would advise you all to pick up something, keep learning, because if you keep learning, I've observed it is very early for me to say, but still, the more I have earned, the more I have learned is like converting to the amount of money I'm earning through the market. So keep learning. Keep learning. By keep learning, I just not mean that you stay in front of the market for 6 hours, but you try to do some back testing. You try to go and uh, study. For example, I'm currently pursuing my chartered market technician. You guys can go and have a look at this degree online, or the subject. It is one of the most highest designations in the field of technical analysis. So if you guys want to like be in this field and be a technical analyst for life, which I want to be, you can pursue something like this. So keep learning, which will again make you earn more. So I had a wallpaper last year which said that first learn and then remove the L. So after you remove the L, it means earn. So yeah, that were my thoughts for this year. See you all in the next year. Love you all. Bye bye. Happy New Year once again.